My goal for the end of 2026 is to build a monster dividend portfolio, and the way I'm doing that is finding strong dividend companies and dividend aristocrats, companies that have paid out a consistent and strong dividend over a long period of time. The first company that I will be adding to the portfolio is McDonald's. Now, the restaurant industry has actually not been performing that well. Over the past year, it actually is down 0.52%. Year to date, though, it is up 4.1%. The CPI just came out, and it actually came in pretty soft compared to what analysts thought. So inflation is starting to decrease, and the job market is starting to pick up some strength. The Federal Reserve cut interest rates by 75 basis points last year. A lot of the market right now is thinking that they won't cut interest rates going into the first meeting of 2026. But I think that consumers are actually starting to regain some strength. Now in 2025, the reason for this slight decrease in the restaurant industry is due to consumers not spending as much, not eating out. Although I think this consensus and this mindset and how consumers are behaving will actually change. We are gaining some strength, and that is due to the Federal Reserve cutting interest rates. And I think going into 2026 and looking at the end of 2026, in terms of forecast, I think the restaurant industry will actually bear out pretty well. Over the past 5 years, McDonald's continues to be a very strong company to invest in. They've increased 45.18%. And over the past year, they're up 8.60%. And year to date in 2026, so far they're up 0.78%. So along with this dividend play, historically, depending what happens with consumers and the internal business, as well as geopolitical concerns, you're getting this huge dividend company as well as some good growth in their stock price. So taking a deeper dive into McDonald's, looking at valuation ratios, their price to earnings and their price to sales, they're actually kind of undervalued compared to the S&P 500. Now, this isn't too much of a concern when looking at a dividend stock, but right now, looking at the valuation ratios, quarter 3 of 2025, their PE was 25.92. So I think they're somewhat cheap. I think I would warrant a buy right now, which I am doing. I'm adding this to my dividend portfolio. But yeah, it's important to look at. 25.92 isn't too crazy. Looking at McDonald's revenue, despite all of these challenges in 2025, trailing 12 months, they're actually up by 1.33%, sitting at $26.26 billion. Now, they really haven't been able to grow it. McDonald's is a very mature company. They've also been struggling, with consumers spending less. But for the most part, they've stayed pretty consistent with their revenue. Most notably, though, what I'm looking at right here is that despite this hardship, the company was still able to produce positive revenue year-over-year growth of 1.33%. Now, also looking at their net income in 2025, they had this hard year, like I've been saying, and their net income was also able to increase by 2.35% year over year. Now, they have been a little up and down, but for the most part, they've stayed pretty consistent. 2023, they're sitting at $8.47 billion. 2024, they had a little bit of a down year. What does this show me looking at total revenue and net income when they had this super hard year in terms of consumers going to their locations and spending? Is that they were still able to generate a good amount of revenue and income. And ultimately, after dealing with all of their liabilities, debt, all of this net income, turns into cash. And that cash is how they pay out their dividends. Another aspect I think is important to look at is retained earnings. So in terms of retained earnings for a dividend play, I'm looking at positive growth year over year. And this shows that the company has generated profits consistently. And McDonald's has done so. 2024, they had a positive year-over-year gain of 5.28%, sitting at $66.83 billion for retained earnings. Now, this shows that they're not funding the dividends with borrowing, which can create a lot of danger when looking at, a dividend company that you want to add to your portfolio long-term. Now, most importantly is their free cash flow. And like I have been drilling into this video, despite this super hard year for them, or just for restaurant stocks, they've actually done a great job. They've increased their free cash flow by 10.49%. So looking at this, with the amount of free cash flow and cash they hold, which ultimately gets paid out, some of it in dividends, they've done a really good job at increasing this. And going into 2026, they have all this free cash flow. that they can pay out a very strong dividend with and continue to increase their dividend. So the most important numbers, their dividend yield is sitting at 2.34% and the sector median is 2.31%. So a little bit higher than the sector. I think the reason for kind of a low dividend yield right now is the stock price has been going up, as I showed in the beginning of the video, which can lower their dividend yield. Now, McDonald's 1-year dividend growth rate trailing 12 months is 5.99%. Very strong. Seeking Alpha gives this a B-, whatever that means. But it's good. It's really good. Almost 6%. And the sector median is 5.03%. Now, their dividend per share growth forward is 6.62%. So their 1-year dividend growth rate trailing 12 months is super strong. And looking at their forward growth rate, which is very important for me because I want to get paid out a consistent dividend, sitting at 6.62%. So super strong there. So all the growth rates, all the dividend growth rates look super strong. So quarterly, they do pay out a $1.86 dividend per share. But we can see from the chart that they've been excessively increasing it from 2021 to 2025. And looking at those forward numbers, I expect them to increase it even more. Now, over the past year, has been a little bit spotty. But, there were these hardships with the consumers not spending as much. So they kind of have to balance all this and start to squeeze some money out of the dividend. But like I said, we have a cooling inflation with the CPI report that just came out. The job market is strengthening. But I think the interest rate cuts that they did do in 2025 is going to help the restaurant industry and let consumers spend more, which will help generate more profit and help increase this dividend. So McDonald's consensus dividend estimates given Seeking Alpha's analysts for 2026, they're expected to give out a $7.55 dividend for all of their dividend payments in 2026. And that's supposed to increase to $8.10 in 2027. Now, their yield is also supposed to increase 2.46% in 2026, and then in 2027, another around 0.20% increase, 2.64%. Now, in 2026, on the low end, $7.08. On the high end, $7.98. Now, I definitely think that $7.98 consensus on the high end is definitely achievable for McDonald's. Like I said, the economy is starting to rebuild some strength. Consumers are starting to spend more. Inflation is, decreasing. So, they don't have to squeeze out their margins too much, and they're able to make more profit. The whole thing for McDonald's right now is making sure these consumers come to their locations and spend. And, ways they can improve that is, making new deals or just new products, which is definitely on the horizon for 2026. So looking at McDonald's last price, they closed at $309.42 as of January 13th, 2026. Now, it's important to look at the stock price, especially for me. I don't have a lot of capital. I work part-time. I'm still in school. There's certainly companies out there with high dividends and low stock prices, allowing me to get a much higher dividend. They very rarely pay out a very consistent and safe dividend. They may have a slight history, but they're much more affected by slight, internal and external factors within their business, which could heavily affect their dividend. I'm looking for a safe bet. Dividend aristocrat such as McDonald's that has paid out a consistent dividend and continues to increase it. So 309.42 is pretty high, but my whole strategy here, as I'll make videos on it going into the future on different dividend stocks that I'm adding to my portfolio, is investing $500 to $1,000 every month and slowly building up this dividend account. I also have different portfolios. I'm a big value investor, so this is something new to me. I think this is important, though, at a young age. As you start to look towards your long-term investment portfolio, passive income is very important. And if you're able to build up that portfolio early, you can rely on a decent amount of money every month, quarter, however you plan out your dividend portfolio. Definitely adding McDonald's to my portfolio for the first company. I appreciate you guys watching this video. I'm new to dividend investing, so drop your opinions down below, as well as any comments.